What's up, everyone? It's Eric with Option Edge, and tonight I'm going over a trade I put on today, actually, in Caterpillar. Okay, so the trade is what I call the buy the dip, except we're not buying it, we're sort of fading it. It's actually a better term for it would be fading the dip, okay, rather than buying it. And that's because we are selling a put spread, okay? We're selling a 40 delta, 30 delta put spread, and by the way, this is my options backtester software. It's called Trade Machine. It's some really good stuff. It looks at the historical movements in the stock and options and gives me, what happened in the past, basically. And I can say that with some good statistical significance from the people that create this, that when the stock goes from below the 200-day moving average to above the 200-day moving average, we usually have some upward momentum, and that's basically what the trigger is here. Stock has to cross up through the 200-day moving average and be either above the 10-day exponential moving average, or be above it, or also cross up as well. And then this last little thing here is the RSI. We want the RSI to be below 70, and that just sort of eliminates any overbought conditions, which if you're under the 200-day moving average, that's probably never going to really happen. But I guess it could happen. So yeah, when we check out the historical backtest, when in the past 2 years, let's look at 3 years, when the stock moves above that, okay, and here's past 3 years, when the stock moves above that 200-day moving average. So let's look here. I got CAT here. When the stock moves above the 200-day moving average, which today it closed above the 200-day moving average, that has historically been a signal that in this situation that selling a put spread approximately at the 40 delta, and buying the 30 delta behind that has been a winner over time. And let's go ahead and let's look at 6 months from now, just to see. That's the most recent one. Okay, it's never happened in the last 6 months. That's interesting. Hasn't even happened in the last year. Go to 2 years. Okay, if I click on the tile, excuse me, average wins 23%. No losses so far, and this has got a 50% sell at 50%. So basically, I like to do let's see, 100. Put 100, see if that changes what's happened in the past. 100 really reduces our win percentage. I like to do is out at 150 rather than, wow, that even 150 reduces. Well, I guess we just had one bad loss that really turned around. But I guess if we close back below the 200-day moving average, then I might consider closing out of the position. So I'm looking for upward momentum in this. So let me go and check out. Let's see what strikes we chose for CAT. Okay, CAT. So I think so I chose the 210 put. Okay, and this was the closest thing to 40. It's at 43. So, and then 210, 205. So we're risking. So this was 30 delta. Okay, so that was almost spot on. So the credit received for this was, I believe, $1.70 ish. Let's call it $1.75. I think I received for the total. I don't feel like doing the math real quick, but yeah, $1.76 is what I received. Okay, so we're risking our put spread is $5 wide, so we're risking about what's that, $325 to make the full credit, which is about $175. Okay, so that's our risk. So yeah, that's the trade. We did this in Amazon, and Amazon usually has a little more momentum than something like a Caterpillar, but we did it in Amazon, saw some good results, so maybe we will see it also in CAT. Alrighty, that is it. Have a good night. If you're liking this stuff, please subscribe, and as always, this is for educational purposes only. Alrighty, peace out.